Welcome to class, everyone. Welcome to class. Like we usually do, how was your week? How was your trading week? Tell me about it. I want to know. I want to learn. In this class, we're not going to waste too much time as we usually do. This class is supposed to last for an hour, or an hour 30 minutes. I'm going to see how I can try to explain everything I need to teach you today into that time that we have. Welcome to class once again. Welcome, welcome, welcome. Uh, we're going to give every other person that will be joining this class 1 minute to 2 minutes to join the class, and then we get started properly. But whilst we're waiting for other people to join the class, um, I'd like everyone to tell me how was your trading week? What did you do? The trades we had another wonderful trading week this week. We had just one loss, which was gold, 30 pips. Eventually, we took another sell for gold and we made about 40 pips. So, yep, loss made back. We made over 400 green pips this particular week. I mean, it's amazing. And then there's something I always tell people. There was this period late last year when I taught you guys about seasonal trading, and then you guys know you understand what July, the month of July is for. I wouldn't really want to talk about it right now because this this class is basically for fundamental trading. All right. And when I say fundamental trading, what I mean is using fundamental analysis, all right, as one of the key factors to trading. So it's not like fundamental trading is a thing. I mean, some people might take it as a thing, but it's not like I take it as a thing, as a thing. So well, fundamental trading to me, or what I'm trying to tell you is fundamental trading actually means using basic fundamental analysis. And when I'm talking about fundamental analysis, I'm talking about news, economic data release. I'm talking about speech. I'm talking about monetary policies. I'm talking about FOMC meeting. And we started this in the previous class where we took fundamental analysis 01. Yeah, this is that's FT 101 rather. This is FT 102. This is the continuation of the last fundamental trading. Yeah. So welcome, welcome, welcome to class. Welcome, welcome to class once again. For those that will be joining us, you know what? Whoever would be joining this class, we just let them join. We just let them join. All right. So yeah, great. Fundamental analysis. In the last class, we or I talked about welcome, welcome, welcome for you just joining us. So in the last class, we talked about or no, two classes, yeah, not last class. In the last class, we talked about technical trading. In this particular class, we will be talking about fundamental trading continuation. And this last one, we talked about fundamental trading 101, where we talked about the idea, the economic news. We talked about currencies and commodities. I think that's where we stopped. And then I told you guys I was going to continue. All right. So now I'll, I'll need you to please mute. All right. Mute. Thank you. Thank you. So as not to disturb the class. I'm sure everyone can hear me. I'm quite sure everyone can hear me. So if I think I didn't mention this, if you have a question for me, if you can't hear me, send me a message immediately. Let me type it here so I can rectify the issue. All right. So yeah, and that's that about that. So the previous fundamental trading class we talked about currencies and commodities and all. So I think that's where we stopped. In this class, we're going to be continuing from there. In the last class, we talked about, I mentioned all these things to you, the safe haven traits, the I beta currency, the antipodians, and the commodities. All right. So in this class, I think I explained safe haven currencies. So in this class, we're going to be talking about I beta currencies. All right. And just to mention what safe haven, just to buttress what I explained in the last class, safe haven trades or safe haven currencies are currency like gold, the USD, the CHF, and JPY. And I explained to you why we call them the safe haven trades. So I wouldn't want to dabble into that in this class. This class we just talk about I beta currencies and then we move on from there, all right? So, but before we dive into I beta currencies, what are beta currencies? What do you mean by beta? All right. For 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 those of you that have initial education of some sort in economics or accounting, you would understand. Probably you understand the meaning of the beta of a stock. All right. I myself I have a certification in financial markets from Yale University, and that's the reason I have a deeper knowledge about fundamental analysis, fundamental trading, and how these things work. So this is just to show you. For those of you that are seeing the screen, you can read what I have here. So I'm not really going to be explaining this what I have on my screen right now. I'm only going to read it out. If I try to explain it, it might confuse you guys because like you can see here, where's my mouse? All right, like you can see, it's better of a stock. It's majorly used in stock trading, all right? But that doesn't mean it's not useful in Forex. An idea of it is useful in Forex. So I'm not going to talk too much about it, just mention a few things. All right, so let's go. Beta currencies. When you want to check the beta of a stock, you're trying to check the level of volatility, right? You're trying to check if uh or how strong or how fast a particular currency reacts to fundamental data. Or let me say how I a particular currency reacts to or a particular stock reacts to news. Okay, let me give you guys an example. Uh, in one of the analysis that I did, and I was checking out Apple. Most of you guys know Apple company. The beta of Apple stock read about 1.6, 1.6. But like I said earlier, for those of you that have an idea of economics, you probably understand what I'm saying more, but I don't want to go too deep for those of you that don't understand economics. All right. Um, the beta of Apple stock was reading about 1.6, and it had this regression line. All right, don't worry about that. The beta was 1.6, and that just showed that was I beta, and that just showed you guys how much Apple reacts to news. I mean, if Apple releases a product and probably large companies declare earnings, like estimate their earnings before it comes. So peradventure, Apple estimated to make about 50 billion in the first quarter after the release of a new iPhone. And eventually, by the end of that quarter, Apple is saying to be making only around 35 billion. That news, just by declaring that earning, that news would immediately affect Apple stock. That is the essence of beta. All right, that's the essence of beta. So now relating that to currency. All right, let me just move to the next slide. Relating that to currency, which is using beta in forex. Beta predicts the level of volatility and reaction of a particular currency to fundamental news and data in the market. For those of you that are just joining the class, like I said earlier, if you have any questions, some of you joined the class late, so no recap. If you have questions, type in the questions now, so I go through them. So if I can explain whilst the class is going on, I quickly explain, and if I can't, I explain after the class. All right. So using beta in forex, like I said, beta predicts the level of volatility and reaction of a particular currency to fundamental news and data in the market, exactly the same way I explained. All right. I beta currencies. Now we're picking them. I beta. We have two: the I beta currencies and the low beta currencies. So you guys should understand, I beta currencies have very high rate of reaction in the market, while low beta is vice versa. I think that's self-explanatory. So not to dwell too much on I beta, low beta. Let me just go directly into the pairs because the essence of this class is the idea behind explaining what I beta currencies are is for you guys to understand the pairs that you're trading. I mean, it'd be silly of you to want to purchase let me see. It'd be silly of you to want to purchase a car and you don't know the first thing about cars. You don't know which particular car will give you problem. You don't understand the engine. Do you understand? So that's the essence of taking all of these classes. That's the essence of me teaching you currencies. Understand what you're trading. In the previous fundamental class, I mentioned something to you guys. I talked about when we talked about fundamental news, I mentioned variance. Variance is the most important in fundamental news. And what I mean by variance is the difference between the like expected outcome and the eventual outcome. For example, okay, let me use the news on I think on Thursday, yes, the euro. We all were expecting, or the market was expecting, Draghi, the ECB, to cut euro's rates from um from I think 0.00 to minus negative. And in some sort, I think they are in negative. Uh, but we were expecting a cut, which didn't happen. How did the market react? There was a buy spike, and then the market did what? Went back down. For those of you that saw the technical analysis I did on Euro and Euro GPP, my technical analysis showed that Euro USD had to make another low to complete the trendline structure and then make a buy. But the news Euro is actually one of the I better currencies which I'm going to explain here. But the news the news from ECB president that they refused to change the rates, it actually pushed Euro up and it eventually fell back. All right, that's the essence of knowing reactability. Let me give you another example. The reason that happened, okay, forget the example, guys. The reason that happened was because the expectation was a cut, but the eventuality was unchanged. So the market reacted. Variance, the level of difference. If like the market was expecting a cut, if the cut had happened, the level of the resultant spike in the market would be way greater than what happened. Okay, I think I have a chart in here somewhere. I think I'll show you guys later. I think I have a chart in here somewhere showing the ECB, the result or the way the market reacted to ECB Draghi's um rate on change. Okay, guys, I think I have a message. Can everyone hear me though? Please, if you can hear me, type yes. I have a message here. I need to confirm this is probably your network. So if you can hear me, I need one person to type yes. Yes, all good, all good. Okay. So I think you need to fix. Yes, you can. All right, great. So um, let me just continue what I was saying. So the ECB was expected to change rate, didn't happen. The market reacted, and eventually euro fell back. So we're expecting euro to probably make a low and then a buy continuation. So let me move directly into the iBeta currencies. Now these are the five, yes, the five major iBeta currencies that we have: the sterling, GBP, the euro, the Australian dollar, AUD, the NZD, the New Zealand dollar, and then CAD, Canadian dollar. All right. So we're going to pick them one by one and explain them. So starting with GPP. Now, guys, don't get me wrong. I am not trying to explain um GBP USD here. All right. I'm using GBP USD to explain GBP. So the focus here is on GBP, not GBP USD. So now this is what I would like you to do. For whatever I explain here, use this to probably analyze other pairs. And what I mean by other pairs, I'm talking about maybe GBP Chef, GBP card, and any other pair. But the main focus is on GBP. So please ignore the currency the currency pair. Okay. So yes, GBP is the strongest I beta currency. And if any of you guys study GBP, you would notice how far and how fast the sterling moves. I mean, sterling, the GBP is a currency that can actually move over 100 pips back and forth in just one session. All right. Strongest I beta currency. Let me see if any of this can explain. GBP is abbreviation, blah blah blah. Also called the cable. I don't know if some of you know GBP is called the cable, but the if for those of you that read market analysis, I gave you guys some websites where you can read fundamental news. It helps you. Please do that every morning. If you want to be serious with forex trading, you need to read the news every morning. Information is the only way you can profit from this market. Be informed, be prepared. If you know the pound is going to be weak today, boom, you know what you're looking for. A sell. All right. I mean, for a currency pair like GBP USD, if the news tells you the pound is going to be weak today, what do? You sell it, but you don't just jump into the market and sell. That is why we have technical analysis. You look for your positions. You look for a sell entry or some way a sell entry and exit. That's the essence of technical trading. All right. But the fundamental trading, news, information, that tells you exactly what to do. And that is why sometimes, guys, you notice um we don't pick trades for hours and I'm just waiting. Why? Because I'm expecting. I know this particular currency is supposed to be strong at this particular time. From the news, from data releases, I'm expecting this to get weak. So I'm looking for my entry and exit, and I'm looking for my confirmation using technical analysis. And that's how you add them together. I think I have a question here. Please, sir, I would like to know where to get fundamental analysis news. Uh, you probably were not in the last fundamental trading class. I think I shared it with you guys. You can get from Forex Live. They do this session wraps. So I think you should go to forexlive.com. You can get that. You can get also from Bloomberg. Go to Bloomberg on your laptop, please, not on your phone. Go to Bloomberg on your system. Um, click I think Forex. Is it Forex or currency? Let me check. Hold on, guys. Yes, you go to currency. You go to topics, then currency. For Bloomberg, for investing.com, go to investing.com on your system. You type Forex. Those websites give you premium uh they give you premium news. So you eventually in the morning, every morning, you can always read those news, and that will give you an insight to what is expected as a day trader for that particular day. So I do that every morning, and market close in the evening just to get informed. You need, especially, please guys, take note, especially Forex Live. You need access to session wraps. You need to understand why Euro USD moved in this particular way, and what the market is expecting for tomorrow. Yes, session wraps. I also use a paid. I think I told you guys in the last class. I use a paid fundamental news platform. Um, and it's not Bloomberg. Bloomberg is quite expensive. I think Bloomberg charges I think $25,000 uh per month or per year, something like that. I think per month or per year. So Bloomberg is quite expensive. I use another one and it's just about $250 per month. So if any of you guys need to subscribe to that platform, send me a message on Telegram. I give you a direct link to it. It's just $250 per month. And with that, you can have access to premium news and that will help your trading. All right. So like I was saying, the pound is the strongest I beta currency. And we all know what I beta currency is. And that's to show okay, before I explain this, you guys if you had been studying the pattern or let me say the trend of the GBP USD since the start of Brexit. All right, you would have noticed a downtrend. And why do you think that is happening? if you followed the news, you would understand Brexit news hasn't been too good for UK, and that's the why the currency had been falling and falling so much. Even when euro was rising, the pounds kept falling. Even when other pairs are rising, uh, pounds kept falling. Why? Due to Brexit. That's to show you the level of volatility, or let me say how strong or how correlated it is to being a high beta currency. Um, GBP or pounds, it's okay. I think this is why I highlighted this. Looking at this chart, guys, look at this chart I have here below this. Look at this yellow, should I call this a rectangle? A vertical rectangle. You notice this spike? If I wish I could show you guys this chart live. This thing happened when Boris Johnson, the new Prime Minister of UK, when he got elected. This shows some level of optimism for the guy. And if you guys listen or watch this guy closely, you would know that Boris Johnson actually promised to leave that UK would leave Brexit by October 31st this year. And no one knows how he's going to do it. If he's going to leave with no deal or with a good deal. But the fact that he got elected, there was a spike in the market. And if this, I think this is on an H4. If you measure this thing could actually have gone maybe almost between 60 to 90 pips, and that's to show you how much pounds. And this is not just for GBP USD. Go across other GBP currency pairs, GBP CAD, CHEF, GBP CHEF, GBP JPY. You will see the same thing. That's to show you the spike didn't come from the fact that this is GBP USD. The spike came from GBP itself, which is the pounds. All right, I better currency. Any news, whatever happens to Brexit, whatever happens to PM, whatever happens in the UK, boom, it's GBP is gravely affected, and that is why sometimes we watch closely. Sometimes we don't trade it. Sometimes yes, we do trade it. Why? Because if you're trading GBP and you're in the right position, the market is about to fall and you're in the perfect sell position, you would make a lot of money from it. If you guys read this news on BBC of this kid, I can't remember how old. I know he's a young kid. This guy, I think, it turned about £8,000 to £51,000 thereabout. I'm not very sure of the number. Um, he turned it trading mostly GBP USD, riding on Brexit. All right. And how do you think this guy made that money? From technical analysis? No, majorly fundamental analysis, because fundamental analysis gives you the basis for what to trade. It'd be stupid of us to buy pounds when pounds is expected to be extremely weak or is currently extremely weak, or it'd be silly of us to sell dollar when dollar is extremely strong. You sell a particular currency where you notice weakness, and you buy it when you notice strength or exhaustion, or maybe a sell exhaustion and or a buy exhaustion, and then it depends exactly. And this is one thing I said: you cannot throw away technical analysis. Sometimes when you anticipate a weakness in a particular currency, it could be weakness for a retracement or a reversal, and that's to show you how much you need your technical analysis. But fundamental analysis gives you the basis for everything you need to do. All right. So I'm going to card. I will be using the USD card to explain this. The US dollar versus Canadian dollar is one of the more sensitive commodity currency pairs. I think I mentioned this in the last fundamental trading class. CAD is a commodity currency, and I explained to you why. I think I'm going to mention it again here. This sensitivity is due to the vast amount of natural resources that flows from Canada, much of which makes its way to the US. Among these natural resources is oil, which is the primary export for Canada, and one that is vital to the health of the global economy. Yes, I mentioned this in the last class. I told you the correlation between oil, and that is why I have this chart here, the double chart. Um, I explained to you the correlation between the oil, the oil market in Canada? Sure, yes. Yes, you can. All right. So, like I said, or like I was saying, um, CAD, the correlation between oil and CAD. So, if there is a news about CAD, it automatically affects USD CAD. Now, this is an assignment I want you guys to do. Immediately after this class, I need you guys to pull up a chart, a 4 hour chart of USD CAD, and then pull up another 4 hour chart of oil, um, crude oil, the WTI. All right, pull up a chart of the WTI and then place them side by side. I can bet with you, you would notice they move opposite. Why? USD CAD, USD is the base currency. So when there is weakness in the CAD, what do you think happens? You buy USD CAD. Simple. When there is weakness, if oil price is falling, what do you think would happen? USD CAD continue to rise. If oil prices start rising up, if you get just go to your chart and check it out. The period where we had an upsurge in the price of oil, you would notice a continuous fall in USD CAD. USD CAD kept falling and falling, and then now that oil prices are reducing, are coming down, you will notice USD CAD continue rising. Go check it out after this class. You'll be able to see the negative correlation between um, USD CAD and oil. And when I mean oil, I mean WTI. Check your chart; you would definitely find it. Actually, the name of oil might actually be different depending on the broker you use. But check oil, check WTI. You should find it. All right. Let's continue. In fact, Canada exports over 2 million barrels a day to the US alone. This high dependency on commodity as an export makes Canadian dollar vulnerable to fluctuations in the prices of oil. I think I just explained this. Um, Although the correlation is never static, over the last 10 to 15 years, the Canadian dollar has held a positive correlation to oil of more than 75% on average. Good, that was mentioned. Variability in the correlation. Always check, always check. So I think that's that about the USD card. USD card is majorly tied to oil. Whatever is happening in oil, in the oil market, directly affects USD card. So don't be surprised when you do analysis on USD card and probably you've drawn out your trend line structure, boom, boom, boom. You expect USD card to bounce here, and then you pick a buy order, and then it's your stop loss. Don't fret. The reason is oil. So when you're doing analysis on USD card, please and please make sure you listen to news on oil, and also please plot the same technical analysis for the oil chart, which is the WTI. So whatever you see there related to what you have on your USD card, then you know exactly what to do. And I think another advice I'm going to give you guys is I think it's based on my experience, it's better to trade USD card long term. I don't think USD card is very good for uh retail. Okay, we are all retail traders sort of, but we don't trade like one. Um for scalpers, I think scalpers and people that like picking short trades. If you guys notice, we don't really pick USD card trades, but when we do, it's majorly long-term trades. We expect the last USD card trade we picked during this week, we made over 142 pips from USD card. And that's to show you when we trade USD card, we go for the long term. We don't really trade USD card for short term. So not to waste much time, let's go to the next one. The AUD USD they are called antipodians, right? Let me read this. I'll explain why they're called antipodians very soon. So let me read this. Australia is one of the world's largest exporters of gold. In fact, as of 2014, the country was the second largest gold producer, only second to China. Here's a chart showing how the Aussie, blah, 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 blah. Okay, this is something I'm going to use to explain the Aussie. It's otherwise known as Aussie for those of you that don't know. Aussie, and when I mean Aussie, I mean this AUSSIE. All right, AUDSD is also known as Aussie. The GBPS is also known as cable. the dollar, the USD is also known as the greenback. So you guys should be writing this down, guys. You all should be writing all of this down because when you're reading fundamental news, sometimes you're not going to see the AUD USD. You see the Aussie, you see the greenback, you see the cable. Those are the terms you see. So you need to get familiar with those terms. So when you're reading the news, you understand exactly what they're saying. Okay. Um, what I'm going to use to explain the Australian dollar is Australian dollar has this. It works closely with China, and not just because they both export gold. The, the majority of what comprises of Aussie's GDP are exports, and then they deal directly with China. Exports and imports, they deal directly with China. So, and that's the reason when something is happening, when something is going wrong with China, guys, check your Aussie, check the AUD USD. It is definitely going to be affected. All right. If you notice, during the U.S. China trade war and during the intense U.S. China trade war, the U.S. China trade war is still ongoing, even though they are trying to sort and solve everything. But during the intense period of the U.S. China trade war, you would notice there was a point the AUD USD was ranging. After a while, it started falling, whilst the Euro USD was buying. You guys should please take note of all these things. If something I would love you guys to do, or after this class, go to all these things that I've all these charts, I have them written down somewhere. Go to all these charts and check them out. Okay? Learn. You've heard from me. Go to your charts and check everything that I'm saying. And that way, it'd be easier for you to keep up. Okay, because now you have some level of expectation for this particular currency and in relation to this news, in relation to this other currency pair, all these things. So once you're doing analysis, it clicks. You know, okay, I think I'm supposed to check this. Oh, I need to check this. Oh, I need to check this. That way you can gather enough information before you trade. All right. So please check all these things. The US China trade war, even though it was affecting the dollar also, but the thing about China is, if anyone has noticed, have you ever seen the Chinese yuan in the market? Have you seen people trading USD Chinese yuan? No, you don't. You don't see it. You don't see that. Okay. So how do you think the US China trade war is supposed to affect the market? With all these things, the antipodians, NZD is also an antipodian. This is how these guys affect the market. Hold on, guys, please. All right. Sorry, I had to drink some water. Okay, so like I was saying, the AUDUSD has a strong affinity to China. So whatever happens to China, whatever is wrong with China directly affect the AUDUSD. And then uh, we're not going to relate it to gold. Gold is something else in its own. Okay. So let's move to the next one. NZD-USD. This is the other antipodian. Um, NZD-USD is also known as Kiwi. Okay, guys, I'm going to be fast. Despite the small size of New Zealand, the small island nation has an abundance of natural resources. However, the country's significant agricultural presence is what attracts the commodity currency label. These resources combine with massive international trade, little wonder it's little wonder why the New Zealand dollar is affected by global commodity prices. However, unlike the Canadian dollar or Australian dollar, the NZD isn't typically tied to the fluctuations of one commodity. Rather, the currency is affected by a basket of commodities and is one of the top exporters of milk, meats, and fruits. Simple as ABC. Now, I don't think I'm going to dwell too much on NZD USD or NZD as a currency. Sorry. Um, it's majorly affected by milk, dairy products, milk, meats, and fruits. Since we don't really trade, it's not as if we trade milk, meat, fruits. This this dairy product, the meat fruit, it affects majorly stocks, and how it affects stocks are the companies that are in maybe industrial productions of all these things, or they are they use them in manufacture of their produce. All of these affect those stocks or the stocks of those companies. The simple thing about NZD and AUD they move alike. NZD also majority of the GBP of which is when I mean GBP, I hope you guys understand what I'm saying. The GDP. I hope everyone understand what I mean by GDP. The GDP of New Zealand comprises majorly of exports. All right, so and also they relate with China. Yes, okay, good. And they also relate with China. So some way in some way, now this is not totally China doesn't really affect NZD the way it affects AUD. So AUD has a stronger affinity with whatever happens in China, okay? But because AUD is more of a commodity currency than NZD. NZD actually comprises of a lot, as you can see on my screen right now. And then let me show you guys something. You guys can see the chart that I have on my screen right now, the NZD USD chart. Now let's go back to AUD. Okay, let me try to get that back here. Here. Okay. Hold on, I'm trying to. Okay, good. No, 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 no. AUD, yes. Can you guys see the charts? This is on a daily time frame for AUD. Now there was this particular class I was teaching you guys about correlation, and then I taught you about currency pairs with positive correlation and currency pairs with negative correlation. This is one of the currency pairs that have strong positive correlation. I mean, whatever really is happening to AUD affects NZD USD. Why? Because they are both antipodians. All right, all right. Let me show you NZD. Now, can you see NZD? Same downtrend. This is the current market price. NZD is currently falling. AUD is also currently falling, and then I think we're still in that trade. That trade we've made about 130 pips. Is about to eat the price is about to eat our last take profit, and then I will be totally out from the swing. And that is how we trade. That is how we make trades. So sometimes you see I'm in a class, I don't call trades for hours and I'm waiting. These are the things that I check. You need to understand the market. And that is why I gave you guys the Forex Live website. It's free. Read session wraps. Once you go to the new spot, click on session wraps. Read session wraps. Learn what happened in the you guys know the sessions that we're talking about, the Asian session, the London session, the New York session. Check what happened in the Asian session before you. Hello, sorry guys. I think that was a mistake on my part. So like I was saying, I don't think I need to show you guys any charts anymore. But what I was saying was, or what I was trying to explain was, okay, you know what? Let's do it. What I was trying to explain was the level of similarities between AUD USD and AUD USD and the NZD USD. Okay, they have strong positive correlation. So whatever happens to the Australian dollar happens to the Kiwi. All right, so please always take note of that. And do your proper analysis, guys. Read, check the market. Do proper analysis. Read, check the market. The market would always provide for you. Okay, information. Information is key. The reason I'm actually taking my time to explain fundamental analysis to you is for you guys. I need you guys, sorry, to understand how important it is to get information. You need information. Don't ever wake up in the morning and jump into your MT4 chart and start plotting blah blah blah. I'm looking for no. You wake up in the morning and jump into the forex market. What exactly are you looking for? You need information to tell you what exactly to look for. I mean, there is no news about the NZD. There is no current news, or um, there is no bubble around NZD or AUD. And then you go on, you wake up in the morning, and then you start looking for uh NZD pairs. I want to trade NZD pairs. That's not very smart. Okay, this is one thing I told you guys in the last class. You mostly do analysis around currency pairs, or currencies with the highest buzz. I mean, currently GBP has the highest buzz due to the new PM Boris Johnson. Boom. You do analysis on that. But first of all, before you do your technical analysis of that, get information. Know what the market is expecting. Understand what the market is expecting. Know the reason why there is a buzz around that particular currency. And that is when, once you get that information, then you can move on to your MT4 chart or your trading view chart, whichever way you do your analysis. Then you start plotting your technical analysis. You're looking for confirmations, or probably in the news you were able to get that NZD is about to fall, or maybe the RBA, the or RBNZ rate is about to drop, and probably we're expecting a rate cut, which I think already happened. They had a rate cut recently. Probably you were expecting a rate cut. What do you think you should be looking for in the market? You should be looking for a sell opportunity. You already have the information. We're expecting a rate cut. When? By 600 GMT tomorrow. So when you wake up tomorrow morning, what are you expected to do? Go to your NZD chart, not just NZD USD, NZD charts, and start plotting. Start doing technical analysis. Look for um the particular currency pair that would have more impact, and why. Usually NZD USD has high impact or higher impact than other NZD pairs, and that's the reason why. Because do you know why? NZD has a lot more liquidity than others. It has what else? What else? USD is NZD USD is a major pair. USD is like the king of currency. Do you guys understand the point? And that is why if you check the list of, I don't know if you guys, I gave you guys this assignment about, I think last year, that was about many months ago, writing down the list of all the major pairs. NZD-US is part of the major pairs, right? And how come NZD-US is classified as a major pair? They check things like volume, the volume of trades, the level of liquidity, um, also volatility. And what do you think, guys? What do you think gives a particular currency pair volatility? It's liquidity. When All right. So like I was saying, sorry for that short break. Sorry for that short break. All right, so let's continue. Like I was saying, what was I saying? Can someone remind me what I was saying, please? Yes. Liquidity. Yes. Thank you. Sorry. The reason most of this, what classifies these pairs as major pairs, liquidity, volume, how many times it's been traded, stuff like that. Okay, and USD is a very strong currency. So yes, that shows how strong or how much the NZD USD would actually react to news releases. So you wake up in the morning. What's the first thing you do? Read the news, understand what exactly is happening in the market. Boom. Then go to your technical analysis. Go to your charts, plot the graph, look for trend line, understand the dominant trend, if it's a downtrend or an uptrend, understand the dominant trend, look for your entries and exits. And I think I mentioned this thing. I think I've mentioned this thing over and over again. The reason we do technical analysis is to look for perfect entries and exits. Even though there is nothing like perfect entries and exits, no one can actually ever get a perfect entry and exit, because the market, yes, the market moves in its own way sometimes. but you pick a very good entry. Make sure you pick a very good entry, and that's the reason you have stop loss. You give yourself space. Give the trade room to do all its shenanigans before it eventually moves in your way. And then if the trade is not going to move in your way, it knocks you out at your small stop loss, and you take a small loss, and then we wait for a new entry. And that's the reason most times I tell you guys, we don't when once we pick a trade and then it knocks us out at break even or loss. I don't tell you guys to jump straight in. I usually just say wait, take a buy stop or take a sell stop. We already have a good entry. So if the market is gonna act, uh, I was supposed to do that. Let me mute you guys again, guys. All right, all right. So like I was saying, what was I saying? Market. I can't remember. I can't remember what exactly I was saying. That's my issue. I don't like being distracted. And that's why I like to mute everyone's audio. The moment I get distracted, I lose track of what exactly I'm talking about. All right. I think that's that about that. This particular class was supposed to treat I beta currencies. In the next class, we'll continue with the remaining parts of fundamental analysis. So, guys, questions. We've treated majority of all these pairs. In the previous fundamental trading class, we talked about safe haven currencies, and then we analyzed all of them. We analyzed gold. We analyzed the JPY, Japanese yen. We analyzed the USD. We talked about what else? We talked about CHF, the Swiss CHF, and then we I think we talked about CAD. Did we? No, we didn't. CAD is not a safe haven currency. CAD is a I beta. It reacts to news a lot. Small news, boom. The little news that happened USD card on Friday, actually it was a USD news. It was a mixed news. And that's the reason the market didn't really have a significant move. All right, that's why we still have we're currently still in some trades, and I'm expecting some good yield, some good profits from those trades. But the mixed news actually led to that. So it happens sometimes. And then this is something some guys do. I think I mentioned this also, guys. Please don't straddle. Never ever straddle. And what I mean by straddling is, this thing that you guys. I'm sure most of you guys do this thing, and you probably don't know it's called straddling. It's a thing, and people do it. Don't straddle. And what I mean by straddling is when you pick, or probably you're expecting GBP USD news. You're expecting news from a particular currency, and you're not very sure which way it's going to go. So you pick a buy stop and you pick a sell stop, thinking um if the market buys, I'm buying with it. Excuse me. Sorry, excuse me, please. Straddling. If the market buys, I buy with it. If the market sells, I sell with it. Nah, that's not very professional of you. Sometimes you notice the market moves boom boom, goes up, goes down, and then it picks both trades, and then you take what I call unnecessary loss. Okay, I think in this, maybe in the third class, we're going to talk about news trading, how to trade the news. Sometimes some of these news, they're not worth trading. On Friday we did something like that. We traded news, and I picked gold. The reason I picked gold is a pair that moves. Gold can move over 300 pips in one day. Gold can be that crazy. Okay, so now we were expecting just one information, one news, and we're expecting dollar to be strong. Okay, but when the news came out, it was mixed. First news was good, second was bad, mixed, and that was the reason you saw there was a small spike in the USD, and then boom, it fell again. But if you checked gold, we made about 44 pips profit from just gold. and that's news trading. There's one other strategy for news trading and the 1 minute candle. I'm not going to teach you guys in this particular class. You have to be in the next class if you want me to teach you that. It's you use basically 1 minute charts, 1 minute candlestick, and then boom, it gives there is something most people miss. And then if you want to trade the news, that is where you get your confirmation, and boom, you jump in and jump out. All right. So please, guys, don't straddle. Straddling is very poor. Sometimes you make crazy losses, and then this is the thing. When I taught you guys on profitability in the profitability class, I taught you the formula for making profit in forex is simple. SPP. All right. You survive, you protect, and then you profit. The market is crazy. It's war. I think I told you, and that's the reason for those of you that I gave my tools to. I call the tools armed for battle. The forex market is war. Okay, you're in a forex market that trades about $5.5 trillion. Sorry guys, that was my network. Sorry, that was my network. Okay, so like I was saying, the forex market trades about $5.5 trillion per day, and I don't accept you have some 500 billion or yeah, probably, or even maybe 50 billion or 500 billion, something 50 billion. If you accept you have that amount of liquidity somewhere, yes, you can call me and then we can create our own hedge fund company, and then we can have a sizable volume in the market. But if you don't, guys, whatever amount of money you're using to trade is extremely irrelevant. I don't have tools for battle. Okay, send me a direct message on Telegram after this class, and we'll talk about it. All right. The tools, the armed for battle tools is for at least you have to be a third month member of this academy, and then by then you I think you have learned enough basics, and then we give you the tools, and the tools will help you. Okay. So like I was saying, guys, uh the forex market is so large and it's so big that whatever amount you're using to trade is extremely relevant to the market. So yes, just like the normal world, some people control this market. Since your volume is useless to the market, what do? You don't trade against them, you trade in line, because when somebody is putting billions of dollars into the market and is moving in a particular direction, is taking a particular sizable position, what do you expect the market? The market usually obeys volumes like that. And these are banks. I taught you guys the banks, the top 10 banks in the world that control 62% of the forex market. I've taught you guys all of these things. So for the new members, hold on. They're all recorded webinars. You're going to get to learn all of this thing. So take your time. We're here for you. For the new members, hold on. You will learn all of this. Okay. So yes, 10 banks control just about 62% of the whole forex market. So yes, there are some people that their volume really matters to the market, but yours don't. So what do? You trade in line with them. And how do you think these guys trade? This is the reason I said we don't trade like retail traders, even though we are retail traders. How do you think these guys trade? They read news just like you. No one, and I'm telling you, no one except a few, probably a few people in the government. I mean, like Draghi, Draghi will probably know if the euro is going to spike up or go down, and that is why some of these guys don't have access to trade. If for those of you that register with some brokers, when you're filling the form, they would always ask you, do you have any family member in the government or that worked or works in a financial institution? Blah 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 blah. Yes, the reason they ask for that is access to some kind of information, because when you have access to some type of information, guys, you will double and triple your account in a matter of hours. Information, life, information. So, like I was saying, guys, these other big traders, they they listen to news, they get information, they read. Okay, they are traders like you. They are trained professional traders, and they wake up, read news, understand what exactly is going on in the market, and then boom. When we say the banks, this is something most people don't understand. When we say the banks are moving a particular volume, when we say the banks are pulling the market in this direction, what do you mean, or what do you think we mean by the banks? You think is a computer program that is doing all of that? Yes, we have algorithm that the market obeys, but do you think is the market or is a computer that moves GBP in this direction or decides to sell this other particular currency? No, traders, humans like you, traders like you that work in all those treasury departments of those big banks, they move the market. When banks like that are selling, they sell heavy, and when they are selling heavy, the volume would always matter to the forex market, and boom, it moves. Okay, so there are humans like you. So if you want to win like them, you trade like them. And how do they trade? They get information, read the news, check, do this thing every day. Wake up in the morning. The first thing I do in the morning, boom, news. I read news from morning to the end of the day. I'm always checking the news. Always something might come up. There's supposed to be a particular speech from let's take for example FOMC. FOMC is USD. It affects majorly the US dollar. Um FOMC meeting, or no, not even a meeting. Let's say um a particular FOMC member is about to make a speech. You check what kind of person that member is. If he's a dovish speaker or an hawkish speaker. What do I mean by a a dovish member? A dovish member is someone that their personal monetary policy is always driven towards a lower rate. So what do you think those guys would want to do? They would always want to or vote for ECB. Sorry, the FOMC to cut rates, slash rates. Why? The dovish. Dovish means cut, slash, down. Hawkish member is somebody that believes in high interest rates, someone that their personal monetary policy sense or their own personal policy about monetary policy is for high rates. So when those guys are voting, what do you think happens? They majorly vote for increase in rates. And when I mean rates, I'm talking about interest rates. The funny thing about the market is everything about the market, it has this um relativity to rates, interest rates, everything. This there is this particular thing is happening in the market. The thing traders want to find out is how is this going to affect the interest rate. If if the World Bank is declaring a particular country sorry, debt free, how is that going to affect their next interest rate? That is one funny thing about the market. The market has this way it relates everything to the interest rate, and that is why we take this interest rate very, very serious with deep analysis, because these little things can continue to affect that particular currency or that particular currency pair for the next 6 months. All right, information, guys. Information. Brexit has been affecting GBP for over a year. I think till it is going to continue to affect pounds till what do you call it, till October, after the final day, and then I think after that, whatever the outcome of Brexit would still always have effects on pounds. Okay, that's the essence of information, guys. That's the essence of information. So, guys, questions. Fundamental analysis, important, key. Learn how to get them. Read this news every morning. Understand the difference between antipodeans and cable, the kiwi. Understand how the greenback affects all these currencies, how to trade them, how to look for positions and all. And that way, that is how you begin your journey to a successful trading life. I trade full time, like I always tell you guys. I am a professional financial analyst. Uh, been I've been trading for professionally for over 3 years. Still trading, will still continue trading. I trade full time, nothing else. Although I'm a bit into fintech, like I think I mentioned this earlier, I have a certification in financial market from Yale University. I keep learning, I keep growing. I'm currently studying something still relating to forex analysis, financial markets from the IMF, from the World Bank. You have to grow, guys. Keep learning. I keep learning. I'm doing a lot of learning and growing process. You should too, guys. Learn these things, and that is how you grow. For those For those that were with me, some of my earlier students are not with me right now. Some of them have graduated into their own bosses, and some of them own their own forest groups right now. But we still talk from time to time. For those of them that have been with me, they will always remember the dream. Everyone has a dream. I shared mine, and I hope you guys have a dream for forex. If you're looking for side also, using forex to make side also, it will stress the crap out of you. Why? Because you're trying to make money in forex immediately. No, give yourself time to grow. No doctor becomes a doctor by going to medical school for 1 day or 2 days or 2 weeks or 1 year. No, it takes them 7 good years. So if it takes a doctor 7 good years to learn and perfect medicine, why do you think it would take you trading forex, the highest paid profession in the world, finance? Why do you think it would take you 1 week or 1 day or one class to become a professional in forex trading? Forex trading can pay you for the rest of your life. You need to understand everything, the tricks, the way it works. I am learning. I am a work in progress. I keep learning. You guys should also keep learning. So study. That's why we have this recorded webinars, guys. Go to the student archive, watch these videos, learn. You have the passwords to some of these classes. We give you passwords based on your level of growth. So the moment you keep growing, keep giving you access to more classes and you can keep reading. The reason we do this is so we can monitor your growth. Some people only asked for first month class. After the first month, they never asked for the subsequent months and they never submitted any assignments. How will I be able to monitor your growth or your progress if you don't even do that? You don't do the assignment, you don't ask for extra passwords to the other classes. How are you supposed to grow? I say this thing always: good forex signals are not enough for you. You need proper education. Educate yourself, learn, give yourself time to grow. And I promise you, like forex is paying me, forex will continue to pay you for the rest of your life, guys. So questions. I think I'm only going to give you guys about 2 3 minutes for questions, so we see what else we have to treat before we end the class for today, guys. All right, great. So looks like I got across to everyone. So in the absence of no questions, guys, I think I've answered the questions that was asked earlier. Yes, yes, I have. So okay, guys. In the absence of no questions, this is where we end the class for today, guys. Like I said, or like I always advise, take a time out. For those of you that trade a lot, like me, take a time out, go out, do something, get a break, come back to the market refreshed on Monday or Sunday night, whichever day you do your analysis. Um, Stay safe, study. I'll see you in the market on Monday. Have a great weekend, everyone.